Hyperwave. I'm Leah Wald, and I'm here with Tyler Jenks. Because I'm in Washington, D.C., let's just make a little football analogy to start us off. Yesterday it appeared that Congress was running for their touchdown. However, now it seems that they fumbled on the 5-yard line and the markets reacted. Today, though, we are going to talk about Bitcoin. About 15 minutes. Nice, quick, short, and a lot of fun. Although, in the end of the day, it is, important to note that even though Bitcoin was up and gold was slightly up, everything else got creamed. Are we getting concerned about the United States and international equity markets, given that they're all correlated? That is going to be a topic. But again, very specifically for today's agenda, Bitcoin on a short-term basis and GBTC. And so with that said, no spoilers. Tyler?
Great. Thank you, Leah. Very interesting day once again in the stock market, as Leah mentioned. All the indexes down between 3.5% and 4%, and most of it came in the last 2 or 3 hours of the day. We'll talk about that at the end of our discussion of Bitcoin. But today we want to continue with our minute-by-minute discussion of Bitcoin trying to get off the bottom. We hit this bottom at 5,900, and we've got 4 targets that we're looking for. We've reached one of them. There's 3 more to go, and each step is getting more and more difficult. But besides that, what we want to look at is the only way of playing Bitcoin in the securities market, which is the Bitcoin Investment Trust, GBTC. We've talked about it on a number of occasions, but I want to show you something very interesting today that might help you, and I know it does help me, get a clearer picture of how Hyperwave is interacting with the crypto space. So first thing we'll do is we'll go to screen share, pull up a short-term chart of Bitcoin so that we can see what happened last night and today. And then we will go into a discussion of exactly what happened with GBTC today and what I think it portends for the future. Here is our short-term Bitcoin chart going back to this low at 5,920. A very, very dangerous day. It turned out to bottom below 6,000 and then put in this huge candle. There was a positive reversal. This is a 2-hour chart, and when you look at some of the longer-term charts, the 4-hour or the shorter ones, you can see how big this spike actually was. Anybody following Bitcoin knows exactly what I'm talking about here. But let's go back to the 2-hour chart, because I've drawn these parallel channel lines off the bottom. And we are coming up to the top channel line, drawing a large wick above it, and then dropping back, and then going back up to the top channel line, large wick, dropping back down to the bottom channel line, which was last night. This is the 2-hour chart, so we're basically looking at about the last 18 hours. A very nice turnaround last night, very important, because we were breaking below or trying to break below 7,500. If you remember, our first goal was to break above the 7,500 off this bottom. And 7,500 comes right in here. We did break through it, but then we were slipping back last night, back down to it. And I was getting very nervous. I was up for most of the hours of the night watching it. It did hit this point, and that's where I drew this channel in, because this morning we were able to move sharply up over 8,500, which was exactly where we were about 24 hours ago, trying to break out. We got turned down one more time this afternoon until we got back down to this channel line. And then we've had 3 2-hour candles. The first one was a doji that just touched it. The second one shot back up to 8,400. And right now we are pulling back right onto that line again. So on this short-term chart, it still looks like a good bottom. We have overcome 7,500, our first step. We still have 100 and 11,100 to go. And they don't even show up on this chart because they're above it. Here's the 10,000 mark. We need to achieve that for step number 3. And then we've got to get up here to 11,100 and achieve that for step number 4. A lot of people are looking for 13, 14, 15,000 as their sign that if we're able to hit those levels, that we probably are going all the way back to old highs. I think we can make that determination if we can get through these next 2 steps, 10,100 and 11,100. I'm going to go back to a little larger chart that takes us all the way back to our peak, December 16th at 19,666. All of a sudden, this puts in perspective what a short-term move this has been off the bottom and how far we really have to go up here to the 10,000, all of this overhead resistance, and then this area at 11,000 that goes all the way back to this peak and this bottom and across the tops here. So a lot of work to do, but we're moving in the right direction, a couple of small steps at a time. It makes sense to me for those that have been out of Bitcoin somewhere in the downtrend to begin picking away at positions, maybe 20, 25% of what your budget is for the Bitcoin trade. For those in a long-term hold, you've got a long way to go to get back to where we were, but you're probably still doing very well compared to where you started off. For the day traders, there is a lot of movement going on between these points. As long as this line holds, and right now you can see we're at 8,194, 8,186, and we're slipping below this lower trend line. So at some point here, we better see some strength coming in, or we could come all the way back down and test 7,500. Okay, that's the real short-term stuff. We are still in a downtrend, number one. Number two, we may have seen a bottom. It's too early to tell if we've seen the bottom. And if we haven't seen the bottom, then it calls into question where we are in the hyperwave. So back to our hyperwave discussion. Here it is. This is the archetype of the hyperwave. 7 phases, 4 up, 1 down, 1 back up, and 1 all the way back down to the beginning. Here is the weekly chart of Bitcoin, going back to when it was $200 all the way up to 20,000. Now, I am going to overlay another chart of GBTC with a little explanation. Here is GBTC. GBTC is a security traded over the counter. It's a trust that only owns one thing, which is Bitcoin. When you buy shares of GBTC, you own shares in the trust, and the trust owns Bitcoin. I'm going to just flip back and forth between these two charts. This is GBTC, and this is Bitcoin. GBTC and Bitcoin. They're almost indistinguishable. We went into a very long discussion of why they are not indistinguishable, because this GBTC can trade at a premium or a discount to what's called the net asset value of the Bitcoins in the trust. Most of the time, this is trading at an average of a 40% premium to the value of the Bitcoins in the trust. 40%. Today it's at 50%. But even with that, I think anyone that has seen our discussion on GBTC knows at a couple of points it went over 100% premium, 125% at one point. And it's also been trading on 4 or 5 trading sessions at a discount to Bitcoin. This isn't the time to discuss all of that, other than to say that even with that wild premium down to a discount or a net asset value difference between the two, the actual movement in terms of technical analysis is remarkably similar. And the only way to play Bitcoin in the securities market until an ETF or a mutual fund comes out is with this security. But what I wanted to discuss today is this point right here, this very important change between a phase 5 drop and a phase 6 up move. Because I've been debating here in the last several vlogs about, are we actually just in a phase 3 and we haven't even begun phase 4 or phase 5 or phase 6? And I said it was too early to make that determination. But importantly, in my opinion, it is not too early to tell where GBTC is in a hyperwave. And to do that, what I've done is I've gone back to the beginning, which was 3 years ago when GBTC first came out. And I am considering this entire move from 2015 all the way until the spring of this year, 2017, into 2018 as phase 1. Remember, phase 1 means that all the price action that you can see here below that blue line can't get above the blue line. That's the definition of a phase 1 in a hyperwave. And having said that, that means that this run-up, which closed, is trading right now at the $14 to $14.10 area, has still not violated this phase 2 uptrend line. I've marked 4 separate occasions, and this is on a weekly chart, in which we've pulled back to this phase 2 trend line. Even after the huge surge up to $38, we're now trading at $14, 60%, the same as Bitcoin below its high. GBTC is doing the same thing. But in this case, we've got a very strong phase 2 line, which gives me a lot of evidence that the phase 2 archetype has not been taken out yet, and we have not even begun phase 3 on GBTC. That is not the case with Bitcoin, because back here is phase 1, To me, phase two has been pretty clear. And my phase three line would come in around 6,300. That's why I was so nervous last weekend that this candle on a weekly basis violated what I thought was going to be the new phase three line, and it did not. It broke it, but now it's trading all the way up here. Tremendous turnaround, and we've still got Friday, Saturday, and Sunday before this candle closes out. But right now it looks as if we bounced off very important support. So we've got two different things going with two different investments that are both underlied by the same thing, Bitcoin. One of them can trade at a premium or a discount. The other one obviously trades at the price of Bitcoin because it is Bitcoin. So that will resolve itself. And I'm going to make a comment about that at the end, about which I think is leading which, because it's counterintuitive. I did want to just very briefly pull up this chart, which is the Dow Jones Industrial Average right through today on a weekly basis, going back 3 years. I just want everybody to keep in perspective what we've been saying, that while we are in a declining market in Bitcoin since December, and Bitcoin moves at anywhere from 3 to 10 times the rapidity of major markets. And therefore, in a short time period, huge amounts of gains or huge amounts of losses can take place because of the tremendous, it's not leverage, it's simply volatility of the Bitcoin and the crypto space. Not so with the large markets that are hundreds of times larger than Bitcoin, with millions and millions and millions more participants. What we have here, going back 3 years, is a flat period following a very big upswing in the 4 years before this chart starts. So this was a resting period in 2015 and 2016 before this explosive move from the summer of 2016 right through January of this year. It's only in the last 5 trading days that we've had this pullback. And they're big numbers, no question about it. 1,000-point drop, 1,100-point drop, 4% drops. Those are big percentage losses in markets like this. And as Leah mentioned, this is a worldwide phenomenon. What the U.S. does, all the developed countries tend to do, not always exactly at the same time, but close enough. The developing countries are a little bit different, and but let's just talk about where 80% of the value of equities are in the world. They tend to move very closely with the United States market. Now, these are the 3 moving averages that we have been talking about: the 200 period, the 50 period, and the 14 period. The only one that has come under any assault is the shortest one, and that has simply occurred during this weekly candle. We are below it now. We'll see if Friday we're able to pop back above it on a weekly candle basis. But all of the others are still in very strong uptrends. And someone on CNBC just made the simple observation that many of you have made. If you simply draw a regression line visually through this move, what happened is during these last month and a half, we went way above the trend, way above even the short-term average. Normally what you do is you hang around this average as it goes up. When you get way above it, you get these corrections, 4, 5, 6, 7% corrections to bring you back down to that support. And I believe that the shorter term one will continue to hold, and the longer term one, which is down around 22,000, which is about 10% lower, is in no danger in my mind of what's going on with our markets or other world markets right now. There's just too much on the side of the bullish case to draw those conclusions. Notice below, we like to talk about the MACD. We're getting across after this action today, but it's the first period that we've had for some time since last summer where the MACD has come together. I mentioned this up at the top, which is the RSI, which had gone to a higher level than I have seen it since before the meltdown in 07 and 08. And I said that it was far extended into overbought territory. Now we're back down to about 50, which is the center line. And that means that the overbought situation is quickly coming under control. So with those observations about what's going on, I just wanted to get back to the main topic, which is Bitcoin and where we are relative to our hyperwave theory. I showed a chart yesterday of a security back in the 1920s and 30s that went into a hyperwave and fell all the way back. And immediately, meaning within months of the bottom, it started another very large move up. Hyperwave, some people that follow it, people that I have taught the system to, have pointed out to me that you could actually say that Bitcoin has had 3 hyperwaves in 10 years. I would argue with that a little bit, but I know what they're talking about. There have been these tremendous moves up in the past, and then they completely go back to the beginning, where it runs from $25 up to $1,000, and then comes all the way back down to $100 or $150. It doesn't follow the perfect hyperwave form the way it is doing now. But I think there's 2 possibilities here. One is that we're not going to be able to keep climbing through all of that resistance that we've talked about at 10,100, at 11,100. It's doing so much work, and the money that is coming in trying to get on the buy side and take positions is having to struggle every time it goes forward, just as in that parallel channel that I showed. Gets to the top of the channel, then falls back to the bottom, gets to the top, falls back to the bottom. It takes a lot of work after this much damage has been done to technical charts. So I am hopeful that we are able to keep climbing and get above that resistance, validate that my analysis on hyperwave has been correct in terms of this is only setting up for a phase 3 bounce that will take us to new highs. If I am wrong, and I told you before, it's more like a coin flip, 55-45. It's not 90-10 that I believe that, because so much damage has been done to the technical charts that we could very well drop back through 5,900 bottom. And to me, that would mean we're going to go all the way back down to 1,000. Therefore, every day is important. Every night when things like GBTC close and the securities markets are closed, Bitcoin just keeps on doing its thing worldwide, just keeps on trading. And we're just going to have to watch. And when things are looking positive, which they are off this bottom, for the 4 reasons we mentioned. 1, it was a very clean bottom. 2, it held support. 3, we had a big reversal candle. And 4, we were able to get right up over the main first line of resistance, which was 7,500. All of that's positive, and that takes us right through today. But I'm just thinking a little bit longer term that we've got a very unusual asset class here. It's only been around for 10 years. It's moving faster and farther and going higher in shorter periods of time than any other asset class that I've ever studied, and I believe anyone else has ever studied. Therefore, when you apply long-term analysis like Hyperwave to it, I think you've got to be very flexible in terms of the conclusions you draw. And just because we do end up breaking down below that 6,300 level, back below 5,900, I think that would happen pretty quickly. But I also think, just as was pointed out to me, that Hyperwave has got this ability because of it is so transformationally important to finance that it bounces right back as it did 2 or 3 times over the last 10 years. And it would not surprise me at all, and I will start looking for evidence if we need to, that that's exactly what we're in store for. But we're getting way ahead of ourselves. That's where Bitcoin is. That's what GBTC has been doing. GBTC is clearly still in a much more solid ground than Bitcoin. And the question is why? If the only thing that is in GBTC, the Bitcoin Investment Trust, is Bitcoin, then how could it be doing differently than Bitcoin on a long-term technical basis? To me, there's only one answer. And that is the difference between smart, sophisticated money that has been in asset classes for decades and decades with some of the top managers analyzing these things, and the newer money, newer meaning 10 years or less, that has moved into this new space and is actually buying the Bitcoin itself. I think there are some very large hedge funds and institutions, even banks, and very possibly others that are using this security as a means of hedging the risk in the 24-hour Bitcoin. But we will see as the months go on if that relationship that I've seen between GBTC and Bitcoin continues. And if I find evidence to the contrary, you'll be the first to know. Thank you very much. And with that, back to you, Leah.
Thank you, everybody, for watching today. And until next time.